This episode of Good Investing Talks is supported by Interactive Brokers. If you're ever looking for a broker, Interactive Brokers is the place to go. I personally use their service because I think they have a great selection of stocks and markets you can access. They have super fair prices and a great tracking system to track your performance. If you want to try out the offer of Interactive Brokers and support my channel, please click on the link below. There you will be directed to Interactive Brokers and can get an idea what they offer for you. I really like their tool and it's a high recommendation by me. And now enjoy the video. Dear audience of Good Investing Talks, it's great to have you back for another podcast episode. This time we are covering a more exotic stocks. And today we are having Irakli of Georgia Capital here. He's coming from Tiflis, I think. You're currently in Tiflis,
Yes.
or?
Yes,
It's great.
yes, I am.
It's great to have you here. A warm welcome.
Thanks, Tilman, for invitation. My pleasure.
It's great to have you here. Maybe let me get some more details on Georgia Capital out and why I've invited you. We already have talked a bit in the community, Good Investing Plus. People can apply via the link below if they want to learn more. I think Georgia Capital is a very interesting opportunity to participate in a quite liberal, like in economic sense, country, and it's also quite well managed and quite cheap at the moment. So people might be interesting to learn more about it. We also had some more videos on a channel on Georgia Capital, which will be linked here, so people can find them. So look above here, so people can find these videos already. But in this podcast, I also want to invest some time to better understand how Georgia Capital came about and like what your background was. Irakli, let us jump a bit back to the 1990s, the early 1990s. We both were a bit younger then, and the world was a bit different then. So Georgia just came out of the post-Soviet time. And as I read your biography, I found out that you were studying in the late 1990s in Ireland and in London and learned investing there and banking there. But like, how did you come interested in banking and investing, and how was Georgia in the late 1990s or in the early 1990s?
Yeah, so very interesting times. I was very young back in '90s when Soviet Union collapsed, and it was interesting to observe how the country lost nearly 75% of the GDP, and you can imagine that there was no water, no electricity, no roads. Roads were collapsing, no heating. Even it was difficult to communicate over the telephone. And I lived as a teenager. I lived in that times, and in '93, I started my university studies at the Georgian Technical University, doing business. Back then, everybody wanted to do business because we didn't know what the hell the business was, because everything was owned by the government. Nobody knew what the banking was because it was a state-owned bank, and state-owned bank was giving the loans to the state-owned companies, and retail client base was not existent other than the depositing money, which was like, I don't know, small amount of money you deposit. You could not even borrow the money from the bank. So this whole world of doing the private business was really exciting for me and for everybody in Georgia, because we didn't know. I didn't even know what the marketing was, the word marketing, or action. What kind of action you need to take to sell the product? So basically, because it was like all supply driven. So basically, when I started my studies in '93 in Georgia Technical University, we had the exchange program to study language during the summer. So I applied for that program, and I went there for 3 months, and I said that, okay, I'm not going back now. I need to stay here and study business, because back in Georgia, with all due respect, there was no knowledge of how the business is done or how economy is working, because we're in a command economy. Basically, it was not market economy. So it was really a big eye opener for me, and So I basically applied for the university. I went to the dean, and I had a very little English, and I persuaded the dean that I really, really wanted to study here. And dean said that, okay, we usually don't accept the like this the students, but you want so much to study that we will accept you. So that's how I ended up, basically just wanted really wanting to do it. So and it was for me, it was a game changer, basically, because in a way, I was really ahead of my peers in terms of understanding how macroeconomy works, how business works, how accounting works, because there's different type of accounting as well. But anyway, it was how the valuation works of the etc. So it was a big difference. And after 2 years studying in the university, I had the choice to choose the banking or management, etc. And I chose the banking because I thought it was something which Georgia really needed to move forward. And I understood that the bank is a big player in the economy. With a good bank, economy can really grow and flourish. Without that, it's like very difficult. So that was my choice back then in 1996. In 98, I graduated from the university. Basically, I had a 4 year really, really exciting studies there. I mean, I'm really grateful to my luck that I ended up there.
But also your passion that you pushed. It's not normal that people are just like so stubborn.
I mean, I guess we Georgians are a little stubborn, So and sometimes it helps, not always, though.
Yeah. It does. Um, did you then decide to go back to Georgia right away, or?
So basically, no. I decided to go back. I wanted to go back, and I went and I studied. I'm sorry. I started the work with National Bank of Georgia, and soon there was a exciting opportunity with European Bank for Reconstruction and Development, and I got job there, and I worked at EBRD more than 4 years, and then basically I decided that maybe I need to enhance my studies. I don't know why I decided that, but I decided that EBRD was a great platform for me to learn the banking. Um, and then we basically started then basically I got the Chevening scholarship, UK government scholarship, and I studied the banking and international finance with City University CAS Business School. Back then it was called CAS Business School, basically. So it was another great opportunity for me, and I want to thank the UK taxpayers for that opportunity. And basically then I came back again, and I came back at the Bank of Georgia as a
Mhm.
CFO, basically.
As you had like no real private banking or even no market economy and no real private banking, so you had to build this banking system from scratch. How much were you involved in this from the beginning, or did you like, was there already something built when you entered Bank of Georgia?
So when I entered Bank of Georgia, when I started with Bank of Georgia in 2004, there were 20,000 debit cards outstanding. Card was not existent, basically, and debit card cost you a fortune. I don't know. You had to pay $300 to get the debit card, and the bank had 8 ATMs. So our
Eight,
strategy was
eight,
eight. Yeah, yeah.
like
Eight, literally,
okay.
literally eight. Yeah, yeah. Two handful of ATMs. So that was something. Yeah. So basically, the strategy was very clear. Basically, that we wanted to build the retail bank, and actually not build. There was, I mean, try to bring people into the banking, because people, it was all cash economy. Um, People were using the cash, and they didn't know how to even borrow money. uh, Banks were not willing to lend to retail client base. So it's almost all focused at those corporate banks. And when I started with Bank of Georgia, we had a market share of 15%. Market cap of Bank of Georgia was less than $20 million, basically. The balance sheet was uh, 200 million lari total assets. So the penetration, I don't remember the penetration, but it was a single digit for sure. Could be below five. So total assets to GDP was probably 3% or 4%. And that was and we started the consolidating, and we started to open up the branches. We were buying the ATMs, etc., and we were investing in retail banking heavily. And we went in 2006 and in London, and we tapped the market, and that was something, because we raised 150 million dollars. Um, and that was a lot of money back then. I mean, it was a huge IPO. It was big deal. So, and because of the we raised the capital, and then we issued the euro bond. That was another kind of big achievement. And so we grew very rapidly into retail banking, and penetration started to grow, and the assets, we would double, triple in a year, even more. Sometimes I think there were times that we quadrupled in asset size. So it was a penetration game. It was at very low penetration. Consolidation was happening, and I mean, these kind of things will never happen now in Georgia in banking for sure. But there are some sectors you can do where penetrations are low, and you have a very fragmented market, and that's where I think that we are our specialties. That's where we can fill the market and grow. And as you know, this $20 million market cap, we were in a $2 billion market cap in 2018, when we demerged the bank into the investment arm and into banking, basically. So it was a great ride. And I think that fragmented sectors, especially in service industry, is a very beautiful thing.
We're already in the topic because you made a bridge to the foundation of Georgia Capital. I think you started first investing with Bank of Georgia, where you were CEO in 2011, or became CEO in 2011. You started investing into other business, I think, in 2014, round about that. I think the hospitals.
Yeah, so basically, the I became the Bank of Georgia CEO actually in 2006 or 2007, basically. um, and then in 2012 we did the premium listing, when we upgraded our listing from GDRs into premium listing, where we got into the FTSE 250 index. And so we grew our market share from more than double to 35%. So we had a 35% market share. We were making 25% return on equity. We had a very strong capital base, etc. Um, and in early 2007, we ventured in Ukraine, and we invested in Ukraine, and we lost a lot of money there. So we came back, to Georgia, wounded, in scars and bleeding, basically. And we said that we need to do something else, because we have a really a very strong position in Georgia. We are growing. We are compounding like there is no tomorrow. And what else shall we do? And so we said, okay, because we don't know how to operate outside Georgia, let's focus in Georgia in different industries. And we started to pick some of the industries where we saw that we could benefit. And one was the healthcare, another was real estate, because we had some number of real estate collaterals, land plots repossessed during the 2008 crisis. So we thought, okay, we have this land plots. It's not very easy to liquidate them or to sell them. So let's build the apartment blocks, wrap up into the mortgages, and sell through the branches these wrapped up mortgages, basically. And it was ticket size for the we were doing the long term mortgages. Back then there was no 10-year mortgages, so we started doing the 15, 20-year mortgages, and it was like revolutionary. And we were selling these apartment blocks. But to be honest, the more our retail business was benefiting even more, because we were getting really high end client base. And Bank of Georgia was more known to be mass retail, basically, and we got started to get more high end with these mortgage products. And then we with insurance, health insurance, we started. And then with government had some program that they would pay for the health insurance for some of the people, but the insurance company had to build the um, hospitals. Government actually, what they did, that infrastructure or hospital infrastructure in Georgia was fully amortized. I mean, I don't want to even say what kind of shape and form these hospitals were. I mean, it was really bad to take the patient there, basically. Um, if you were not ill, would get ill in the hospital for sure. So government came to the insurance companies and said that, look, you build the hospitals, uh, new ones, because there's no point of renewing the existing ones. We will exit from the healthcare system fully, um, and basically we will pay for the insurance premium for the healthcare for I think back then was 1.5 million people. So we said that some of the insurance companies thought that it was like an insurance enhancement for healthcare, but we went and looked at the healthcare system as full, as a whole, and we saw that we were shocked that it was bigger than banking. It was totally, the government exits. It's like a totally fragmented. That's just so we said, okay, we need to consolidate it. We need to maybe an investor in healthcare. It's not like an insurance, just invest and builds. Hospitals, we should separately manage the hospitals, separately manage the insurance, and basically build and grow. And basically we went and grew. I think it was we one stage we had like 30% market share in hospital beds, and next one was like 2% or 3%. Um, so we entered into, we bought the water utility, we entered to renewable energy, we bought then two pharmacy chains and we consolidated them, and that was probably one of the best acquisitions we have done. We consolidated five insurance companies, merged them, and so that was kind of and we grew that business pretty rapidly, and it became a very big portion of our business. Not very big portion, but it was like a one third was this investment portfolio and two-thirds was the bank, and
So
we became
still the
pretty big.
time when you were
Sorry.
CEO of Bank of Georgia.
Yes, we are. We are. I'm a CEO of the Bank of Georgia. Back then, we restructured. We put the in the bank the different CEO. I became the CEO of the group, and then we had a kind of a different these portfolio companies. We had a separate CEO there. So it became like a bank conglomerate. Maybe in Germany when Deutsche Bank and this auto, the auto producers, etc. That it was a big conglomerate, bank conglomerate, something like that. Probably that's where we were. So that caused kind of a big growth. Anyway, we listed the healthcare business separately. Actually, so we had two listed companies, Bank of Georgia and the Georgia Healthcare Group.
Maybe let's go back a bit. Before like 2018, you started to spin off Georgia Capital with a lot of the assets. But before that, what kind of framework did you use to find new businesses? Was it more like that you got approached by people, or was there already a framework that you looked for certain business criteria and declined others?
Um, so basically, we I think number one thing for us always was the management. Do we have a management depth? Who will manage this or that business? And this was first was always the management. Then we obviously looked at the sector and how attractive it was, margins, investment, etc. But we really like these consolidation stories of the fragmented, especially in service industry, basically. So and that's kind of was a criteria, and also I think that the pricing was very very important. We called it that we want to buy cheaply, and everybody wants to buy cheaply, obviously, but for us was the uh, we can you can make a lot of mistakes when you buy things cheaply, and because we were self learners, we cannot allow to us to pay full price. So we were opportunistic. We were looking some opportunities, and in Georgia, access to capital is and was very limited. So there is no private equity funds focusing on Georgia. Local capital market is not developed, so access to capital is very very much limited. So we were probably the only game in town. If we wanted to exit your business, probably you should talk to us, basically. So that was kind of a approach.
What is cheap for you then? Like, what multiples do you think of then?
Yeah. So basically, usually what we would do, we would say that We would take the public company multiples, uh, um, and we would divide by two. So, for instance, healthcare businesses were trading at 12, 15, 20, 25 times. So we wouldn't take it 25 times, obviously, but we say let's say 10, 12, 40. So we would not allow ourselves to buy hospital more than six times. So we would buy it five times, four times. That was kind of a target. Was that we bought most of the hospital below five. Very last one we bought, I think, closer to six times EV/EBITDA. So that was kind of how we were defining the cheap, half price. We want half price.
Before we jump into Georgia Capital's foundation, maybe let's think a bit about Georgia as a market. Georgia has 3.7 million inhabitants, I think, as Wikipedia said, and is might be also very densely. The people live in very densely populated areas, like around Tiflis and some major metropolis, so to say. So, how much of Georgia's economy did you already know before you founded Georgia Capital in 2018?
I mean, because we were the bank, and we were doing the corporate banking. We knew a lot about Georgian economy and the sectors, etc. We were kind of a pretty knowledgeable. As I say, we knew every cat and dog in this town. So, and then every player in business, basically, we understood very well, etc. So that's obviously a helpful knowledge in general, that you know the sectors, how they operate. But actually, it's a very different um, proposition to be a lender or to be an equity holder. uh, actually, we landed later on, but before we were very confident, we knew a lot about it. But it's not like the case. You need to you learn more, and when you become an equity investor. But anyway, so that was kind of a, yeah, we actually were comfortable with Georgia because we know this country very well.
Georgia has, compared to other markets in the region, maybe, and also like other developing countries, very pro business setup. How good or easy is it to do business in Georgia, in your eyes?
So basically, the what we have here, that government understands very well. In order to create the wealth, we need to bring the investments in, because we don't have oil or gas, and or we don't have internal resources, we don't have internal savings. Internal investors internally are very limited. So we have to be a good, friendly to the investors, and this is the only way we're gonna grow our GDP. So, and that's government understands very, very well, and that is the primary driver for the Georgia to be so business friendly and investor friendly. And I think we are very lucky not to have oil and gas. It would be a different country, and probably not very not very well run and managed, to be honest. I don't want to exaggerate, but it's my speculation basically. But government knows that we need to have a good governance, and they have excellent governance. They have an excellent business environment. So uh, we are very happy to be investors here in Georgia. So that's a kind of probably the biggest comfort as well. We as a Georgians participate in the building of this country. So it's a privilege. It's a kind of lifetime opportunity when you are building the new sectors, you are building new managements, you building new companies, and you are doing all of this in your country. And these companies are helping this Georgia to go forward. And you participate in this. You have some small participation in the progress which this country is having. So it's great pleasure to invest in here.
Do you see any risk that the pro business setup changes with political shifts in the near future?
I don't believe, because basically the fall of the communism 90s, and I'm gonna say probably not very popular thing now, but I think we should let all the nations to go fully bankrupt. because they get their act together. And sometimes we want to help them. We are good people, we want to help them. There's IMF, there's a World Bank, and there's great organizations. But basically, you are not letting the nation to learn its lesson. And that's what happened to Georgia in the early 90s when we lost 75% of GDP. Back then, nobody knew what Georgia was and who the Georgia was, basically. I mean, so there was we were not even a part of the World Bank or IMF probably in the beginning. We were soon probably we were, but so what happened that Georgia went bust and people realized that there's two things why we live so badly. One is the corruption, and second one, there was a big corruption during Soviet Union, and that was the main thing, corruption. And second one is a socialism and communism. So the side effect now we have that left wing parties have a very very low popularity. Left wing parties get less than 5% together. So basically, you need to be a pro business, pro market in order to win the elections in Georgia. So I do not think that anytime soon we are fearing this. That is what another reason why we eradicate the corruption, etc., and we tackle this problem was exactly because of this lesson learned in early 90s. And that was kind of a big help to the country that we were sorting out the governance, and we are actually pro market, and our governments are pro market basically. And some people want to equality and socialism, and I would love to invite them to Georgia in 90s or late 80s to experience it.
Coming back to the point of corruption, is there still significant, or is there still corruption in Georgia, or is it like tiny?
No, basically we are doing the business and we are everywhere. We don't come across that. So basically, there could be something somewhere, something, but it's not something which comes from the top. It's vice versa. Basically, so that's kind of another big pleasure to be in this country. That's where you are when you do the business. You do it for business, and that's kind of also another kind of big plus for Georgia.
So let's jump back to the business level. As I already promised, in 2018, you decided to spin off parts of the Bank of Georgia conglomerate into Georgia Capital. Why did you decide to do that?
I think there was number of different reasons, but basically we were systemic bank and we were investing also at the same time. And I think it's a little bit unfair for for stakeholders of Bank of Georgia to have to possess the such risk as having the investment is a risky business. Basically, it's a very risky business, and you have a bank and the investment together and deposit, etc. So it's one leg. Another one is that uh, it was becoming too complicated, basically, and too big, and we were also very big for the country. I mean, imagine. So we were in 2018. Our market cap to GDP was 12, 13%, and all our business were in Georgia. As a comparison, Samsung was the same market cap to GDP ratio, but they were all over the world. Now you can imagine how big we were for this country, basically. So you we it's just we had to split these two and have a pure banking, which would be the pure bank play, and investment separately. And actually, when we split these two, uh, investment is I realize that investment is even more difficult proposition, because when you are part of the big bank, you can have a margin of error, let's put that way, because a big conglomerate, and we became smaller basically without the bank. And we realized that it's even you know our discipline should grow, it should double or triple.
Why did you keep the shares of Georgia Bank of Georgia in Georgia Capital?
So basically, because the market cap would have been too small, and we thought that our investors would suffer with the liquidity of the stock, etc. So that's why we kind of increased the size of the investment company. So that was kind of the main idea behind it, and that's probably is helpful. I don't know, but back then that's what we saw that would be would be beneficial for the size wise and liquidity wise to have a Bank of Georgia in the portfolio. Plus, it's a great investment.
Mm. So you could think of selling these shares one day when the other businesses are big enough, or
But so basically, it's we. I think that the Bank of Georgia is grossly undervalued, maybe even more undervalued than Georgia Capital, to be honest. Uh, so now we don't think about that at all. Uh, so the but actually, nothing is strategic is in our portfolio. Our strategy is not to have strategic investments in general. But basically, we are not a typical private equity house which can rotate its portfolio, and we are just difficult animal, I guess. So that we are not rotating the portfolio that fast, and we won't be able to do it because we are only Georgia focused on the one hand side. On the other hand, we are not like a conglomerate which operates from one headquarters all the businesses. So the Georgia Capital is 25 people. We are just capital allocators, and that's what we do, and we let businesses to run themselves because each business needs to have a value as separately with the management, etc. So in case we decide to exit the business, that there is a separate platform, which a management platform and everything that some third party can come in and buy it. So basically, we are not a private equity because we don't rotate, but we are not conglomerate. But we are conglomerate because we are holding maybe longer than some of this. So it's like I don't know what to call. To be honest, probably we call it ourselves investment company basically. Uh, and probably that's what we are. I don't know.
let's find more about your nature in this interview out. But coming back to Bank of Georgia, you said it's grossly undervalued. What do you think the fair value of Bank of Georgia is, and maybe why?
um, I think right now the Bank of Georgia is trading at 3 times price earnings, and it's making 30% plus ROE. Is it gonna make 30 plus percent ROE forever? No, but can it make 20% plus for forever? Probably it can. Yeah, I mean, it's been making so in past I don't know 20 years or so, or 15 years or so. So basically, I think that cross you count to what cross you want to say that, and doubling the price of Bank of Georgia. Some analysts do have a target price of 46 pounds when it's trading at 21 basically. uh, I think one analyst has that, but in general, I think it's a grossly undervalued. And then if you look at the like a Bank of Georgia's valuation and then our discount, etc., you will see how how grossly the Georgia capital is undervalued. So I don't, so that's where we are. That's fact of life, unfortunately. But so that's where I see it. I think that double of the Bank of Georgia is probably that's where the fair price should be.
Coming back to Bank of Georgia in 2000, you had a very warm seat there as CEO. Why did you decide on a personal level to leave this seat or not retire and say, okay, I enjoy life from now on, and I don't want to build a new business line again? And yeah, what drove you to go to Georgia Capital?
Okay, but I think that basically I'm the person who gets bored easily, or maybe not very easily, but I need to have. I think that it's also exciting stuff to build a new investment company. I think that we are in the business of building different institutions, and when you are building different institutions in different sectors, you learn a lot of new things. So I enjoy learning of new things. In Bank of Georgia, actually, there's a lot to do, etc. There's a huge digitalization. The new CEO is heading. I think he's doing a great job in doing that. But I think that for me, being in different industries, a lot of different industries, it's a very exciting thing to do. And so that's so I saw that, okay, I will let somebody else to run it, and Joe and come and do something else. And I enjoy it. I don't know why in my place somebody else would say that I want to stay with Bank of Georgia, and okay, we spin off and we find some new CEO for this investment company from internally or externally or what have you. Basically, I don't know what kind of person would do that. I mean, for me, it was very obvious that I wanted to Georgia Capital, basically, to venture there new things.
You already explained it a bit, but maybe let's pick this out. What is the key target of Georgia Capital?
So basically, the idea is to compound returns and 25% plus a year, and that to grow NAV per share. Um, Now, so far, we have not been in 4 year of our history. We are not there yet in terms of the growing our NAV, but we are not too far away. Basically, I think we are at 15% territory now, but it's not good enough, obviously, and we need to grow, and I think we will grow to make sure that we are making 25% NAV growth per year on average. 20, 25, above 20 we should make, but 25 would be kind of nice to do. So that's kind of the very simple target for us, um, and um, and that's pretty much it. I mean, it's not complicated.
So with this 25% return target of NAV growth, it's a challenging target, and you have to own good businesses for this. So what kind of business do you like to own or even build at Georgia Capital to achieve this target? What nature of businesses do you
I
like?
think uh, service industries are somewhere which was the sector which I think it's exciting and which can grow and generate such kind of growth and returns. Um, the one of my favorite one, for instance, now is I have favorites apparently, but anyway, my favorite is education business, K to 12 in the schools. We are investing phenomenal sector. I mean, phenomenal business. It's like it's amazing. I have not thought such sector exists. Just to give you just very simple kind of a overview where what education how education sector works basically. Um, so you have a revenue locked up for more than basically 12 years. You have revenue locked up. Your capex is limited because you don't build some sophisticated buildings or equipment you don't need, like in hospitals, for instance. If you compare, right, the hospitals, you need a lot of sophisticated machineries, MRIs, etc. Then the teachers are easy to retrain and train, unlike doctors, for instance. um, and basically the EBITDA margins are greater than in capex heavy healthcare. So you saw that the healthcare sector was good, but I have better one. I think that the education one is basically is something which is amazing sector basically. What has demonstrated education, it's even greater. So the worst crisis, the COVID was the worst crisis for education because kids cannot go to school, they cannot attend they cannot use the infrastructure. So in that kind of cases, some sectors, they just go bust. What happened in education? We grew EBITDA in private schools. How we save the costs? We could even make some inflation because inflate some prices because of distance learning, etc. But in the worst crisis for education, we actually grew the business grew. Now we have more than two times acceptance this year. Now we're just closing the acceptance basically of new students two times more than the COVID times and pre-COVID times also. and this has a huge growth in Georgia because people believe in education in Georgia a lot, and we are offering affordable education. It's one of the we are actually in all three segments, but we are growing the affordable part pretty aggressively. So basically, and that's where we are going to consolidate even further the education, private education, basically, and that's what kind of a I think this kind of sectors can generate not 20 and 25% growth, but even triple digit maybe for some time.
You already mentioned that you learned a lot by changing your position from debt to equity holder. Can you maybe elaborate this a bit and share some of the learnings you had?
Sure. So basically, just if you look at these two two very different animals. So in the bank, you are a debt provider, you are collateralized, and you are diversified. So you have a much warmer seat. When you are investing, like the portfolio what Georgia Capital has, we have a very concentrated, and you are equity holder, and you are on the kind of a subordinate to the debt, um, uh, and uh, and basically you are um, your margin of error is very limited. So you really need to be extremely disciplined when you're making your capital allocation decisions. It's very easy to make a mistake in investing in equity because it's not that easy to run the businesses profitably and grow them profitably and find the good management, etc. So I think that that's kind of the very two very different, totally different paradigms and the way of thinking as well.
How important have people become in this equity focused approach? So, how much focus do you take on like your team at Georgia Capital and also the management teams in the companies?
Basically, this is all about the people now. I mean, the bank was obviously also the people business, and it's we need to have good people. But here is just extremely important. Growing and developing talent and helping them, and because you cannot run so many businesses, it's impossible, and don't even try. And even if you do if you even if you can run, then they are not going to be liquid for you because people are buying management. We had this recent very good partner coming into our water utility business, but the focus was that the management with the excellent management team, that's what attracts the strategic investors. So we are I mean it's we need to have a top class management team to bring a top investor because we need to bring strategic investors who would pay international prices. So what we are doing our business is to buy locally with local multiples, consolidate, grow, bring management, and develop as an institution, but develop as an international institution which would attract the international strategic buyers who would be willing to pay international multiples. And that's kind of a business. That's why we should be able to generate high returns because we are not buying at international multiples and selling at international multiples. We are buying at local multiples and develop and building the international team, which would be competitive even if they come to Germany. They should be able to run like the companies run in Germany, and they should be the checks and balances, governance standards, risk management should be up to the speed so that they can compete even in EU. So and that's a proposition. That's what we do, and that's why we think that we have managed to bring a very good investors in Georgia as well, international
How,
investors.
how do you find these people and how do you incentivize them, right? That they stay with you for a longer time?
For us, the foundation of Georgia Capital is a good governance. We think we are a great believer at that good governance uh, gives us access to the capital, international capital markets, and gives us access to the management. Management is attracted with the good governance. um, and I think that good management. They want uh, professional, well balanced boards, which that they can learn and grow and develop. And this is kind of attracts each other. Good governance attracts the good management, and good management and good, well governed companies are attractive. I'm looking for the great talent, and I think that's kind of a. I mean, if you look at the foundation of Georgia Capital is good governance, which gives us access to capital and access to management, and that's kind of what the Georgia Capital is all about. We need to bring and develop and grow and incentivize, and we incentivize them with shares. So we say, and we have now the proxy shares for each portfolio company, and to say that whatever you manage, you're gonna have part of it. And our cash bonuses and cash salaries are not very generous. It's they can drink the buy a cappuccino and some sandwich, but they can but they can become wealthy by having a proxy shares, or in case of the Georgia Capital and people who work in Georgia Capital, of Georgia Capital shares they take. So, and that participation is a critical, and that's what the great talented people are attracted to, and we are looking all the time.
So to work it out a bit, so good governance is not like having fresh fruits every morning for your employees, for you.
Definitely not. We don't have fresh fruits. If they are, if we behave well, we get a cup of coffee maximum once a day.
But what is then good governance for you in the company? How does it like boil down to examples?
Yeah. So basically, there are no personal interests. The interests are for the company and to grow and develop the company. And the interest is for me. My interest is to help the CEO to be successful, and we can bring help for him. The senior people at our board, for instance, who can help them when they present the projects, etc. They are to help, uh, not to push somebody. The politics occupies very little in a good governance. Probably there are some politics always, but I don't know. It's very loud word maybe to say that we don't have internal politics, but we are all driven for the value creation, and
That's your
and
politics.
that's our politics exactly. Yeah, that's our politics. So if you want to be there part of it, you are very welcome. And if we start doing some internal politics, some people's have egos, etc. I mean, we all do. We need to manage them, right? So, but that's when you get crushed, and you won't bring a good people who want to work for this environment where we are. We all have a one goal of creating the value.
But like with every good approach, it's normal that you do mistakes setting it up and you have to learn from them. So since 2018, what kind of mistakes have you done? And what have you learned from it? And how did you fix these mistakes?
Um, I think that one big mistake. I mean, it's not big in size, but it's actually in terms of the management time. It took some. We invested in subscale businesses, which were exciting, but uh, it would not really move the needle into the NAV of Georgia Capital, and we lost a lot of management time. For we have not invested too much in that businesses. I mean, it's not like a ticket size that capital wise, but we lost the management time, which is also a capital, right? So I think that was the mistake which we realized, and that That's why we have the other category in our portfolio where we put the subscale business, and we say that we'll be exiting it slowly. And I think that not slowly, but we would exit. It's for sale basically, this business, right? So. Um, uh, that was probably strategically biggest mistake which we made when we started Georgia Capital. And now we are focusing on scalable businesses. We say that we want to have a 300 to 500 million lari of equity ticket size achievable before we even invest. Even if we don't see that this business can achieve equity value of 300 to 500 million lari within next 3 to 5 years, we just don't touch it. We just so that was kind of a big one. I think that and we realized that that was not a very good idea, and we stopped doing it. And we don't invest in the subscale business, and we are putting for up for sale for we put up for sale the subscale business. We exited some of the business already. We exited, for instance, commercial real estate business pretty attractively, actually. Which was small business in our portfolio. So we also I don't think it wasn't that a mistake other than the uh, I guess it was strategy wise. Also, another one was that we want to focus um, on the sectors which are not capex heavy. So the Georgia capital having the big discount, and we invest in capital heavy industries is just makes no sense. You just then go and buy the Georgia capital, right? And I think that even if our discount goes to zero, we should not invest in the capital heavy uh, industries, because but I think that we will get back to the discount, because you need to have a cash available all the time to tap the opportunity of the buybacks. That's where it was. And the third one, I guess I have a lot of mistakes to learn from. I think that another one is probably the leverage at the holdco level is not the best idea when you are an investment company. So I guess you need to have a limited leverage. That also, because whatever cash is generated, you are, it was. I think it's a lot of leverage on holdco level, which we have decreased significantly after the selling our water utility business, 80% of our water utility business. So that was kind of so we have realized that mistakes, and we have addressed, and we are addressing them. We will address. Um, another one which we are addressing is a chairman CEO. I think that we need to split this role in two, because, as I said, the investment is a risky business. We need a greater balance in the governance. So I think that that would be another improvement, which will make. Actually, it was a good idea to in a startup phase, right? But right now, after 4 or 5 years of existence, and I think that we are on the right track. I think there is no need for one person to occupy these two roles. It's a it's a different. We were comparing that there are a lot of chairman CEOs in investment companies who invest in the public stock. Uh, and we said that it's different. Public stock, you have a liquid stock you own, and you can sell at any time. Here you are own the private businesses which are not that liquid, because you are in Georgia to start with, right? So, but to my surprise, that we'll talk about our exit, but to my surprise, there are actually, for good companies, there's a lot of hunger for well-run, well-positioned companies. So it's not that I thought that Georgia would be not that liquid, but actually for the company class what we have, I think that there is quite a demand. So anyway, so basically, I think that that's splitting. Another thing which we are addressing is splitting this role in two, and hopefully next year we will announce the exact how we will be doing.
How does it work that you realize these mistakes? Is someone coming from the team and saying, "Hey, this might be a mistake. It doesn't work that well," or is it like you sit there and, "Oh, nah," or you have some mentor who helps you with thinking about things?
All three. People come and say, but that's why you need to have a culture that people speak up. If you don't have this culture that boss is right and everybody is wrong, is like you are doomed for failure. So our culture is that you talk about it, what you are not happy with, etc. Board is a very the good. That's what we call the good governance. When we saw what is a good governance example, the example of the good governance is identifying the mistakes, ability to identify the mistakes, right? So that's a good governance. So, and board, we have a very high caliber board, and the board is very much involved, and they look at us, sometimes we can go crazy, and there's a board who to tell us, you are you are too aggressive, or you are too etc. So that this balance is very, very important. So I think that, and you also yourself, yeah. And for me, it's very difficult to work with people who do not uh, recognize mistakes, because we all make it, and we need just to learn from it. If you don't learn from it, then it's a bad judgment. Then it's not a mistake; it's a bad judgment. Huh?
Jumping from mistakes to crisis, I think we already mentioned COVID a bit, but we discussed this in the community with you because you came on to chat with us, and people who are interested in this can jump into the application form below via the link to the community. So let's think about a bit about the crisis you currently have, like, or the crisis we are both in from the impacts of the Russian attack on Ukraine and all the changes. What does this mean for Georgia and Georgia capital? Like, since the beginning of the year, what has changed through the attack of Russia on Ukraine?
Um, so Georgia been attacked before, so we know what it is like that in 2008, and but we were lucky that the whole conflict has been resolved very quickly, um, and that's kind of a um, it's we had a very brief war basically. Um, so we as a nation knew what Russia is capable of. I think that just people, just forget Georgia, or this Georgia was too far away from Europe, so it's not happening with us. It's happening somewhere else, and I think this Ukraine was very close to Europe. This war in Ukraine was close to Europe, and that's kind of a woke up the European countries, and it's good that they woke up. Um, uh, but for us was obviously a big shock in terms of uh, war next door neighbors is not very pleasant, obviously, and it's not good news. Um, but slowly we realized that, and we thought it would be a big economic shock on Georgia, and we had the different models and macro models, and we thought that we would have a zero growth on in 2022, sometimes -2 or -3, etc. But we humans don't know. We can guess something, but it's like a difficult to know things what would happen, and that's why it's good thing is to live one day at a time, not to worry too much about the future. But anyway, the what we realize that um, a lot of region has changed. The economy of the region changed. So if you had like Central Asian countries um, transporting oil and gas and different goods through Russia to Europe, they're now using more of alternative routes through Georgia. If you had a uh, you also had a lot of Russians who we didn't expect, that they just left Russia and they moved to Georgia, especially in people working in IT industry. And then now we are having IT services exporting from Russia to Europe and other countries, and with that services we never exported. So our labor market changed dramatically, labor structure changed dramatically, the potential GDP growth most likely changed dramatically. A big shift has happened there. Um, then exports, like if you look at um, for instance, we have a Heineken, we brew Heineken beer in Georgia, and Heineken stopped export producing Heineken in Russia. They have 10 breweries there, and they stopped exporting from Russia. So they needed the destination. Now we are exporting in 7 countries where the Heineken Russia was exporting. So we have a lot of side effects which caused the Georgian lari to appreciate from 3.3 to dollar to 2.8 or 2.85, and against the euro and against pound even greater appreciation because we had a big inflow of the foreign currency. The Georgia's business friendly environment also helps here, so we have a investment also coming in. Q1 was probably not probably Q1. Uh, if you look at the foreign investment in Q1 versus the GDP, it's the highest ever recorded. So you have a big investments coming into the country. You have a, labor shift, market shifting, structure changing. You have logistics changing. You have exports going up, and Georgia did a great thing also to have a free trade agreement with China and EU. There are actually 2 countries who have a free trade agreement with simultaneously China and EU. It's Switzerland and Georgia. So basically that also helps because our we are exporting, exports also stepped up. Tourist recovery was amazing, and I think that the government managed to change the tourist structure as well. We managed to attract the tourists from the high after the COVID, from high earning countries and actually high spenders. So now right now we, in terms of the numbers, we have a 65% of number of tourists recovering. So 65% of the 2019 tourists are coming to Georgia in numbers. But in terms of the money spent, is more than 100 what we had, more than 100% what we had back in 2019. So that's why we had it last year. We had 10% GDP growth. This year we have 10% plus GDP growth, real GDP growth. So huge growth. Like I mean, base was high. So if you look at the kind of a recovery in 2019 in Europe, we are a number two after Ireland. So this Ireland is ahead of us in terms of the growth of GDP compared to 2019, and then it's Georgia basically because we outperformed 2019 by far. And basically, the nominal GDP in dollar terms now it stands around $25 billion. It's a small amount, but we were before COVID we were around 17, 18. So this huge growth and the lari appreciation together actually created more attractive investor destination for the foreigners.
Besides all the good news, I have to play a bit Doctor Doom. So, how do you see the risk that Russia one day attacks again Georgia in in this decade?
Uh, you see, I think that we think uh, we we already been attacked, and Russia got what they wanted. These 2 land plots, basically, which they have. So I think attacking Georgia again, it's unless there is a Olympic sport of attacking Georgia is not. I don't think that it would happen. I mean, it's like my view, but I think that I think other nations are more under danger than Georgia because like we are kind of part of Georgia, then Ukraine, and maybe then someone else. So we are ahead in that game.
So you don't see a high likelihood of an attack again.
I yeah, I don't think it's not like if you attack Georgia, what you gain, you already have what you wanted from that, right? So so I think that there are more things to do than attacking Georgia.
You already mentioned that many Russians came to Georgia now. Do you have a rough number how many Russians are there? To remember for the audience, it's 3.7 million people that live in Georgia, so even a smaller migration could make a huge difference.
Yeah, especially in the industry which is not present in Georgia. So basically, the numbers are somewhere between 80,000 to 200,000 IT specialists. Let's put that way. Um, and even if you have 50,000, uh, basically you have 50,000, they earn $50,000 a year. That's a 2.5 billion. That's a 10% of GDP. That's a very big number, basically, even for 50,000. So if it's 100, then you have like a double of that. It's like a 20% of GDP.
And we already know that you're a good businessman and a good investor. So, what opportunities
I'm not
do you
sure.
see?
I'm not sure about that. That's good that you know that, but sorry.
Yeah, you've made something with the bank. I think that that might be good for some investors as a criteria. So, I claim to say this. What opportunities do you see coming from the migrants to Georgia and how they are already impacting the business of Georgia Capital?
Yeah, I think that's kind of a interesting. I think very interesting opportunity, and there are kind of I think the twofold, like immediate. Uh, I think that it's exporting IT services. Um, um, you need it's more supply driven than the demand driven. So if you have the good IT teams, which on outsource, people can order their softwares to be built and written, etc. So we have now that, so we can, I think that we can, and we are experimenting with one of our small businesses to export the IT services, like coding, for instance, to sell the code to foreign companies by using the IT resources. So that's one we are looking at. Another one is basically uh, uh, we are in education business and we are in healthcare business, and everywhere we need ed tech, etc. And there are people, and I have been meeting these people, group of people who've been in this industry, and we are can build a partnership with very talented Russians who can help us to write the to create a new products, new digital products. So that's another opportunity. But itself, the opportunity of, for instance, um, this conflict created a lot of side opportunities in education, for instance. And we are in healthcare business, and we are in education business, and there was a lot of Asian countries using Ukraine, Russia, and a little bit Georgia was using for medical education, in medicine, basically, and university education. And now we are looking that Georgian medical universities are getting flooded. And it's very natural for us. We are in both industries to enter the medical university, and export that services. We have the uh, doctors who teach and will teach, and we have the hospitals where we train, and we have everything. So and the market is huge. So we are looking at this opportunity very closely, both from education point of view and from the healthcare point of view. So there are gazillion opportunities. We just need to be very disciplined which one to pick. Why I like the university one? Because we are already present in both, and it's much easier for us, I believe. And capex wise, it's much lighter because we already have the hospitals. We don't need to, build these new training centers, etc., for the students. And I think we can attract a uh, high caliber students in that industry who want to study in the medicine.
Maybe walk me a bit through how you decide between these gazillion ideas and how you decide like what comes out at the end of the engine, what really gets the energy. Hey, Tillman here. I'm sure you're curious about the answer to this question, but this answer is exclusive to the members of my community Good Investing Plus. Good Investing Plus is a place where we help each other to get better as investors day by day. If you are an ambitious, long-term oriented investor that likes to share, please apply for Good Investing Plus. Just go to good-investing.net/plus. You can also find this link in the show notes. I'm waiting for your application. And without further ado, let's go back to the conversation. To end the crisis part of the interview, where's your energy coming from in Georgia? Like the electricity and the gas? And is there a risk for you from high prices?
So basically, we are a big renewable producer. We have a lot of hydro, um, and we have a next door neighbor, Azerbaijan, with whom we have a long-term contracts, and we have a very friendly relationship with Azerbaijan. And we have the gas is coming from Azerbaijan, and the renewable energy mainly is local, and with some gas turbines which are fired with Azeri gas. So we have not had the Russian gas. I don't know for how many years. So we have diversified 15 or 20 years ago.
Yeah,
Diversified away.
that's what we will also do. But yeah, it's a painful thing. Um, yep. Let's jump a bit to your NAV and the NAV calculator on the website. Here in the video, you will see this, and that there is a nice tool you have on your website, which you can also find via the link below, and where you can, somehow work around your NAV of Georgia Capital and get an idea how you define the values you have. But when I talked to other investors, there was always the question how trustworthy this NAV is. And like, let me frame this into a question: is how do you work on making these numbers, which are NAV, which are calculation numbers, like real money numbers at Georgia Capital?
So basically, we do the DCFs. I mean, we are not, we are not inventing the wheel there, right? So we do DCFs. We compare to the multiples, international multiples, um, and that's how we come up. I think that the best way to do it to actually realize the value and see whether people are willing to pay that NAV. So the last transaction which we did to realizing water utility value was 30% premium to our NAV. So if we are trading at 60% discount to our NAV, it's, I don't know, we sold three times more valuation than investors are valuing our water utility business. So, but then investors say we don't believe it anyway. So that's how we are. You are still at 60% discount to NAV. So we are enjoying the NAV discount. Yes.
How do you come to the peer multiples? Like, what is your process of picking the right peers, for instance, in the hospital space?
So, but mainly this DCF driven, the cash flow driven, the whole the multiples are more kind of a check, and we have a Dobbs and Phelps, the third party evaluator who comes and does the value, and then EY who signs off on that. So basically, we have a lot of third parties who are doing that, and I think that um, uh, the DCFs show that I think we are conservative. That's why we sold at 30% premium. Uh, uh, let's put that way. For there is a control premium which we are not valuing, right? For the strategic investor to come and have a control of the company, they pay for that, obviously, and that's not valued in our NAV valuation, the control premiums. Um, I think whatever we sold, it was always at NAV or above NAV. The commercial real estate businesses which we sold, it was not big, but it was it was above the NAV. I think it was 40% above NAV.
So one important driver to raise the value you have there is this strategic investor. So where do you find them, and how do you approach them? And yeah,
We don't find them; they find us. So basically, um, there is a lot of hunger for good quality, high growth, well run, institutionalized companies. There is a big hunger for that, and I think that the uh, um, I think that we've been approached all of our companies we have in our portfolio. We had credible buyers approaching us, talking to us, and sometimes we don't talk, sometimes we talk, etc. But we said that okay, uh, we saw that we had a good interest on this water utility business from different buyers, from different bidders. And in the end, we decided to go along with the current one, Aqualia, who bought this asset. And um, we are very happy with this transaction, with the partnership. We are happy that the investment value has been growing also. So I think that investors are very happy because we had it on our when we sold our 20% stake. What we have retained in the company was valued at $45 million, and now I think in two quarters it's went up to $55 million. It's a value because the company's growth of EBITDA and cash flows, etc., are actually the more than we expected due to the energy prices going up. It has a renewable energy attached to it, and plus we have appreciation of the lari. So that's kind of a short story. We don't find that they approach us, and then we talk, and then we engage or don't engage or what have you.
maybe can you walk us, if you're allowed to do this, a bit through the sale of the water asset? Like what assets did you have there, and when, yeah, like when the buyer approached you and how the buying process worked for them?
So yeah, maybe I cannot say every detail, but I can try to talk what I can. But so basically, we announced in November 2020 that we want to realize the value of one of our large investments. In order to in this way, we thought that if we put the value at NAV or above NAV, that would help to eliminate the discount. Um, so as soon as we said that, we had multiple approach for our portfolio companies, so large investment portfolio, and for other investment portfolio as well. So we had like a lot of incoming inquiries, and actually I didn't realize, but it was a good approach to start if you want to sell something. If you do like if you say like that, I'm not selling. We did not say what exactly we are selling. We said that portfolio in that large portfolio one of that we will sell. So it was a very good exercise because we saw a lot of interest for different assets. uh, so we didn't realize that it was, but it was a very good approach, and we have, God bless. And we had a lot of incoming inquiries, and since we had the incoming inquiries, we started to talk, and there were some credible parties, not very credible parties, etc. So for those credible parties, we started to spend some time and educate them about the business. We had some management meetings. Management was also incentivized properly on the sale. That's important, basically, and. And as we walked through and we were getting non-binding bids, and then we were moving on to binding bids, etc. So uh, it was interesting process actually. We never sold before in private transaction. We had a lot of public deals, but large private transaction we did smaller private transactions obviously, but with strategic we haven't done it before, and it was very interesting learning. But Yeah, that's actually it's much simpler than people think.
Is like when the deal is finished and the money is on your account, is the relationship with the asset over? Because I think in this case it was a Japanese buyer, if I'm not totally wrong, that bought the asset, and the management of it is also like something that has to be done on the ground. And do you still have an involvement there? Is this kind of service company maybe for the buyers of assets?
No, 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 the on the water utility, the Spanish company bought it, the
Sorry,
Aqualia.
sorry.
Yeah, yeah, yeah. So on water utility basis, we are 20% shareholder there. We have a put option from 2025, but we are the partners. We sit on the board. We work together. We actually, we have a very intensive meetings, etc. And it's actually a very fruitful partnership. Um, I think that Aqualia wanted to have a partner, local partner, to guide them, and we are very happy partners with Aqualia. Actually, it's so far we have a very very good partnership. So, um, and I think that's kind of a probably recipe for our strategic guys to come in and we help them in the beginning with our minority shareholding to get. No, some may not want, but that's also a kind of a service we offer in a way. So it's part of this deal, I guess. And we have a shareholders agreement, and we obviously obey this agreement, both parties, and that's kind of a you know pleasure actually to have such a knowledgeable partner because we are learning more. And as I mentioned, I love to learn. So
I also would love to learn a bit about like how you use the cash proceeds you get from the sale. And like general there is like three options, like reinvest into the business, pay back debt, or do buybacks. So how did you decide in this case? And you already mentioned that like the debt levels you have weren't like that happy for you. Tell me a bit more here.
so we have a most difficult question. Probably for me, it's how you allocate the capital between these three. Investing, buying back. Buyback is also investing. We are buying our own. That's how we look at it. We are investing in Georgia Capital basically, and deleveraging, and that's where we have put up in May. Uh, 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 we had an investor day in London, and we have put up this framework uh, where we how we allocate the capital between these three. So basically, we have this NCC ratio, what we call it's a net capital commitment, which is basically a ratio of net debt plus investment commitments. What we have, these are the off-balance sheet investment commitments, and then we divide that ratio to the portfolio value. So, and we say that the combination of these two, the net debt um, and the committed investments should not be more than if it's close to 15%, then we are more bullish in buybacks. So if this one is above the 15 and now it's around 23, we are actually we are okay to do little bit buybacks, and the leveraging is more kind of a on the agenda. So if this ratio is towards the 45, we don't do a buybacks, we just deleverage aggressively. So basically, so this is a kind of a knob volume button where we are in terms of the how aggressive we are on buybacks, and how aggressive we are in terms of deleveraging. So right now we are in a middle territory where we are doing a little bit of buybacks. We in past actually 12 months we did a buybacks of $25 million worth of stock we bought back, and we are buying back some more. So we are kind of in a mode of volume is not high up on the buybacks; it's a little bit down, and on the investment side also we are trying to to limit the investment. So our investment portfolio is it's what we have identified: education, renewable energy, and the outpatient clinics, basically. Which outpatient clinics is actually generating enough cash to do reinvestment itself, and we are not investing there. And education and renewable, that's where the Georgia Capital as a investor is putting up the money. Actually, I want to just underline here that all the reinvestment what the our portfolio company does, we at Georgia Capital we need to sign off on that. So it's not and investment committee decides on that. So management is not management has a full delegation into the operations, but when it comes to the capital allocation, that's where we come in. That's where we step in, basically.
How do you think about dividends at Georgia Capital?
So I think that for us, dividends, uh, as long as we can generate a big increase the NAV per share by buying backs, by buying back the shares, I think that's what we will do. But as long as this discount closes down, then we will be thinking more into international dividends. The Let's say the sustainable dividend capital return policy for us can be done as soon as we take care of the leverage, basically. In 2024 we will be repaying the bond, and that's where we want to decrease leverage significantly. And since we will do that, the cash flow was generated by operating company is not reached to our investors because there's a debt in between. And I think that as soon as we take care of this debt, I think that dividend policy can be introduced. But I think that I would call it more kind of a capital return policy, which would say that we have an option to buy back or give you cash. So every 6 months, probably, that's where we need to be. We decide, or we are buying back or give you cash. But investors will have a visibility on the amount of buybacks or dividends they will receive. Right now, they don't. Right now, we are very opportunistic, and we just say, we come out and say, okay, we have $5 million, $10 million buyback program, and we switch on and switch off. So it's we cannot commit because of this debt what we have, and we cannot commit to kind of a continuous and progressive capital return policy, basically, right now. But we hope we will soon after the leverage.
Thinking about debt or leverage, what is the sustainable level you want to keep in the future? Or is there any metric you think that should be the future key metric or the future key range?
I think that so for us, if you look at the debt and the capital commitment or balance sheet commitment, for us is the same in a way. So we want this tool not to be more than 15% of our portfolio value. So right now our portfolio value is around $1 billion. So I think $150 million of debt, net debt, and capital commitment at the given time is a conservative, well uh, balanced numbers. For instance, we should not commit more than $150 million to invest at a given time, or we should not have a net debt of combination of the debt and the uh, uh, committed capital. You should not have more than 15% on. Right now it's $150 million. So that's kind of the way we think that we are comfortable, and that's the kind of a area in historically where we think that this is a comfortable level of debt and the capital commitments together. So we've been conservative here because capital commitments you may change and you say, I don't want to commit that capital, but also this is good for us for our discipline. So we need to manage ourselves as well. So it's good for our discipline that we don't commit too much in terms of the investment. So we are in proportion to our portfolio. We are not aggressive in terms of the investments and commitments.
Before we close the interview, maybe let's jump at the renewables, which we haven't discussed really in details. How do renewables fit to your like more asset light approach in the company? Because it's
It,
like
do-
heavy.
it does not. We had that one. So asset light we announced in May, and it's not the something which fits right now. We were committed to build some projects, so it's very difficult to recommit if you are in process of building, etc. But we need to solve this puzzle as well because it's not part of our core strategy.
Can you do a lot of like? Do you need a lot of equity to build renewables in Georgia, or is there also like in Germany, many companies can just like take capital from the bank and build renewables because the cash flows are so plannable?
You would need to put up some equity. Here in Georgia, you do. You cannot do only with the bank, but we can also do this business, which is a very good business. Do a third party money and be like a manager, or have a partnership where you don't commit that much, etc. You bring more debt, and you do it more asset or equity light way. So we are working on that to solve that puzzle. But this is something which is on top of our agenda. How we gonna go about renewables right now in our NCC ratio? When I say it's 23 or 24%, it includes the commitment to invest into renewables. Uh, so if we manage to solve this puzzle in a way that either we are managing, we are in partnership, or what have you, we may not, this commitment will fall out, uh, and which would improve the ratio, and which would allow us to do more buybacks in a way.
So, what is your strategy in renewables then? If it's still evolving, you can also say it's still evolving at this point of time.
No, no. The I think that number one, the goal would be to stay in the business, but be generate more like a fee income out of it. Be a manager rather than as a Georgia Capital being as a manager rather than investor. Maybe stay as an investor. Whatever we have invested now, and we have a some investment, but then we manage other people's money as well, and that's where we make the returns and the fees and the return sharing or carry sharing basically. So that's a kind of another approach what uh, we think we can take. Um, so but that's we don't have a final solution yet. So I don't want to just say too much that we don't which we have not arrived, but we are working. It's on our top of the agenda that we make this renewable energy asset light.
So we started in the early 1990s, and now let's jump a bit to the future. Let's maybe think about the year 2027, like in 5 years. How likely is it that you will still be CEO of Georgia Capital then?
Well, for sure, I will not be CEO of Georgia Capital. I will be chairman. I hope anyway. so I so but I look I'm I enjoy what we do, and basically I think that this company, uh, the Georgia Capital as a asset, as a capital allocator, I think I can contribute as much being a chairman as I am a CEO now, because it's not the way we run these companies. Is basically you need to be really hands off from the operating companies, and I think that the being a chairman, and we can have this. Capital allocation strategy which is appropriate, and then I can do it not full time, to be honest. And I think that investors also will be happier that they can get uh, you know cheaper version of me. So
How will you go about finding the new CEO then? Will it be the person that came across to you honestly and said, this is a mistake and this is a mistake? Or what is like the search formula you will do in this case?
I don't want to jump ahead, but I think that people who tell you that who are courageous enough and care enough to tell you what mistakes you make, I think that's a very big value, and
And
that's
is Hmm?
obviously will be valued that individuals or group of individuals basically who are open.
Is it likely that the person will come out of Georgia Capital's team, or maybe it's, if you don't want to say anything here, it's also okay. But
No, no, no. I think the more likelihood to come out from the Georgia Capital team than not, to be honest, or from the group basically.
and then think about like the line of businesses in 2027. What might be new businesses under the umbrella of Georgia Capital that are in the scale of bigger businesses?
Um, in 27, for sure, we gonna our education business could be the largest one in our portfolio, or close. I don't know. It will be large for sure, but I think it will be big uh, for sure. Um, I think that another industry which I like a lot, and it's in our other businesses basically, and we are really testing the management there, and it's auto services, which is fragmented. There's one large player, and then it's totally fragmented basically. And I think that to make there a number two player is a big industry, big sector. I think that also resonates to our ability to consolidate fragmented. Sectors grow in the service industry, etc. So it's kind of our bread and butter. So that's another one which I think that's could become a upcoming investment company, investment stage company basically, and that's where we might be investing in the future. Um, could be that. I think that clinics and pharmacies will go outside Georgia. As we as a Georgia capital do not invest outside, but our asset light businesses are encouraged to go outside of Georgia. And I think that we will have pharmacy chains, and we are building also the franchises. So we take a lot of franchises. For instance, we have a franchise of Body Shop, for instance, right? And so we'll be growing outside Georgia in Azerbaijan, Armenia, and maybe other countries as well, with these pharmacy chains and with franchise shops. Um, I think the polyclinics, which are also asset light, basically, we can grow this one into the region. We may start growing our education business in the region. So there are a lot of opportunities to for asset light businesses to go outside. So that's how in 5 years time, I think education business will be big. I think the polyclinics business clinics will be big as well. I think that pharmacy we are already outside a little bit, but it will be regional pharma will be regional player for sure, strong regional player basically, and it will be very attractive for big strategics because they with one go they can cover the whole region basically. Um, I think that polyclinics and the schools will be open for sure in the region. Our lab, which we just got the JCI accreditation in the region, is only JCI accredited lab. Um, will be also regional player. Um, and probably we would exit one of our large investors. I don't know which one. I don't want to name, but probably we
It's
will
not a
need
good
to.
strategy. You already said.
So probably we will exit one of those, and then we will have uh, as I said, the auto services. Maybe I don't want to jump ahead, but going into um, the investment stage company. So next 5 years we are pretty busy, I think, in terms of the growth, and we can generate a lot of growth with very little capital commitment, to be honest.
I think
And
I've
sorry, we
asked.
will have a
Yeah,
capital return policy in place, probably.
yeah.
Yeah.
I've asked all my questions. Is there anything you want to add for the end of the interview we haven't discussed that comes to your mind, or like?
No, no, it is actually my first podcast ever.
Yeah.
So it was, and I enjoyed very much, and I want to thank Thank you for such a great interview and such a good engagement and such great questions. I think it's an excellent time I had with you. Thank you.
Thank you. Thank you very much. And I also enjoyed it. And thank you for the audience for staying till here. And bye bye at this point. Till the next
Bye
interview.
bye.
Bye. As in every video, also here is the disclaimer. You can find the link to the disclaimer below in the show notes. The disclaimer says, always do your own work. What we're doing here is no recommendation and no advice. So please always do your own work. Thank you very much.